when you're saying buy Boeing with a price target of $200, which is a decent upside from here, what are your assumptions?
It's a good question. So you have to look a little bit further out on Boeing because the near-term cash flow is negative. They've actually guided to that. They said the first half of 25 is going to be negative, the second half positive. But it's going to be a number of years, before they're generating sufficient cash flow to kind of justify our target. So we're looking at approximately $11 billion of free cash flow out in 2028. We discount that back. That's how we get to a $200 price target based on a 7% free cash flow yield out on that 2028 number. So one does have to look a little bit further out before you can, anchor to some hard numbers.
Yeah, that's a 19% upside. What's the risk to your outlook?
Well, besides typical, cyclical risk that could beset the aerospace industry at any time, and that's unpredictable as of now, the risk is execution. Fundamentally, that has been the Boeing risk that we've endured the last couple of years. So whether they can actually ramp production, scale it efficiently in a cost-effective way, if the supply chain cooperates throughout, those are all major uncertainties. But it looks like we're turning the corner on a number of those fronts. As you know, the new CEO has basically slowed things down to get the process right. And he wants to go slow before he goes fast. I think that's the right approach, and that's what they're doing now. That's why the Q4 deliveries, even in December, if you look at what they reported today, were pretty anemic. But that's expected because he's slowing things down to get the process right so that it's a good process that can be scaled and sustained once it's ramped. So, yeah.
Yeah, it is all about that execution, as you say, Gautam. I'm just curious to get your thoughts in on those deliveries to China, a massive aviation market, no doubt critical for this company as well, given some of the delays around some of those orders, but also because, of course, the Chinese state-backed COMAC C919 has been trying to sort of give these companies a bit of a run for their money and try to sort of break the grip that this sort of duopoly has on the business. How are you watching that?
Well, it's definitely a watch item. Certainly, there's always a risk of a more significant third competitor like COMAC. I don't view it as an imminent risk. There's tremendous demand for these airplanes now, for the lift today. So again, right now it's a question of execution. Longer term, if we're looking out 5 and 10 years, it's definitely a competitor one has to watch, much as Embraer is. So always a risk of a third competitor coming in to the single-aisle aircraft market.